Bon. So let's make accounting 1.101. Is it 101? Yeah, accounting 101. Here we are. So how things works in a business. I don't think you guys are stupid, okay? So the reason I'm explaining you that is to show you how the tax applies to this accounting system. So a business normally will have revenue. If not, stop doing it. It's a bad idea, okay? So plus revenues, okay? Then after these revenues, we have to take out some costs. If we have accountant here, please don't start annoying me with cost, expense, blah, blah, blah. It's like we make things simple, so cost, okay? After that, what you will get net income, okay? Yeah, after that, what will happen? You know? Yeah, tax. So you will pay your tax. And after that, you get the results. For the whole purpose of this exercise, we'll say it's a profit. It could be a loss. Again, it's not good. But yeah, so let's say it's a profit. If not, I can't illustrate what I want to show you here. And after that, here we are. Normally, in many countries, we have to pay minus dividend tax, you know, but here in Hong Kong it's 0%. And after that, you have your net profit, right? I mean, your net profit was already here. After that, you get what you can spend. So here's your net profit, sorry.
Is there any cap on dividend to be 0%?
It's always 0%.
Above, I think 30K, you start paying.
No, here is 0%.
Regardless?
Yeah. Okay. So that's sweet. By the way, we talked about VAT before. Normally, in many countries, you know, you have to pay your VAT out of your revenues here. You know, I mean, you have to add the VAT on top. In Hong Kong, there is no VAT. Okay. And then here you have the money you can spend, basically. Yeah. Okay. So, how does these apply to these simple accounting? Well, in Hong Kong, you will have like 3 different type of cost, I would say. The number one will be your salary. So as I show you here, is a good idea to give yourself a salary, or if you have a spouse or something that doesn't make money neither, you know, it's good to give her a salary as well, or him, you know. Okay. So how much? We say it around 240K is a good idea. So that by doing that, it will reduce your net income, more cost. Okay, and you only pay 3.5% on this salary. Then after that, you have your business cost. Okay, so what are the business costs? Well, in order for me to be here, you know, and do this presentation, obviously, I need to dress. I need to get a laptop. You know, I need to get well, a bag to carry my laptop. I need to get, in this case, I'm recording the event, so I have the camcorder. So all these contributes to the business. So this is genuine business expenses that I have as a business owner, okay? So business cost. And then in Hong Kong, there is something sweet as well. I'm not sure I will let that on YouTube, but it's like you can actually deduct many expenses. Like many things fall under business expenses. So I would say it's still business cost, but it's not that business cost, okay? What I mean is like, you have a net income now. Then after that, you have to pay your tax. So as we said before, this is 16.5% tax, okay? Then you get your net profit on which you pay no dividend tax. So you can get it out of the business, and here we are. Job done, okay? So this is the way the tax structure itself. Oh, sorry.
If, for example, in the first year I don't have any revenue,
yeah,
then can I still put in the cost, put
yeah,
into the company and get some tax?
This is a really interesting tips that you are giving to everybody here. Is like imagine you don't make money, okay, which may happen, okay. It's not a good idea to keep not making money on the long run, but I mean, sometimes you have startup costs, right? That takes a while. So you can still have expenses. Now, don't make like 0 revenue and 2 million costs, you know, because then this is a bit weird. Unless you can prove it, unless you can come with really genuine business costs and say, look, I'm developing a software here. I have to pay my guys in Hungary or Philippines or India, you know, and then I have to spend money, you know, I have no choice, and there is no incomes because the app is not ready, you know. If this is the reason, no problem, you can explain it. But now if you expense like crazy, you have no revenue and you have no reason and you can't explain it, then you have a problem with the tax, okay?
Explain to, do you mean to the accountant?
Sorry, so your accountant, the tax representative. We just get the case last week. We get a client that was expensing quite a bit, and then we had to explain it somehow to the tax department. It's like, hey, it's not tax department, it's the RRD.
Do they have like a credit on their bank account already, or what?
What do you mean?
Like, do they have, does their bank allow them to overdraw money then?
Ah, no, but they put money, you know. The guy just put his own money, and then it's just an accounting thing. But basically what's happening is that he was spending quite a bit. And then we explained, that, look, it's a startup stage. The guy had to travel a bit. And it was actually genuine, you know. The guy was not overspending for the sake of it. It was just like he's starting and he has to spend money. I mean, that's normal. Okay? So, yes, it's okay. Now, the good news is this. If you have a loss in your company for the first year, even the second year, this loss will accumulate itself. And imagine the third year you make a good money, then you won't pay tax. I mean, this loss will actually compensate your profit, and then you will only pay tax on what remains. Okay, so it's a good idea to expense even if you don't make money. And in Hong Kong, this loss can stay in your company forever. Okay, so it's not like in many European countries, for example, after 3 years, you eat your loss because done. You know, you have to take it out of the business. Okay, that's the case in my country. So after I think it's 2 or 3 years, I never worked in Belgium. So I did my master there, and then after I left, so it's only like university knowledge that I still have from taxation in Europe or in Belgium. So basically, after 2 or 3 years, basically you have to take the loss out of the business. When actually in Hong Kong, you can keep it forever. So it can be in loss for 5 or 10 years if you want. Okay?
So
Yeah.
you need to keep the receipt for expenses.
Sorry?
You need to keep the receipt.
Yeah, keep everything. If you don't keep the receipt, your accountant cannot put it in your accounting. Okay? So keep the receipt. Yeah.
A digital receipt's fine?
No,
Or they certified?
no. If it's an email that you receive, let's say hosting, so you have your website, host it on a GoDaddy or something, and you receive an e-invoice from GoDaddy, that's okay. Now, if you go to one of the bar downstairs, with some of the buddy you meet today, and you get a few pints of Guinness with the Irish dude in front of me, and you want to put that inside the company, you cannot take a picture and just throw away the receipt. You have to keep the receipt. Okay, but if it's normal to receive an e-invoice, like GoDaddy, or you buy some images on Shutterstock, or you buy some video on Shutterstock to make your video montage, etc. That's okay. Or you buy something online, it's okay to have that as a paper, basically. Okay.
So you keep them for a year, and then
7 years. So you have to keep all your papers for 7 years.
and at the end of each year, you give all of them to.
Well, this depends on your accountant. They operate in a different manner. Some will ask every month. Some will ask at the end of the year. Some will ask you to have it really structured. Other will just ask a shoebox with everything inside. Kathy is smiling because that's my way. As I put everything. It's like, okay, girls, have fun. It's bad. They always complain about it, but it's okay. Yes.
You have a few words mentioned before, the nomad and the clients in Thailand. Isn't there also the corporate tax subject to territorial tax? Like, if I could claim that none of the business was done in Hong tax
Yeah.
net profit is equal to the revenues minus cost, and then you pay out all the net profit as a dividend to yourself, and you end up having a 0%.
In theory, yes. In practice, give me a call tomorrow. Because yeah, so that's what we call the offshore tax exemption, which works for some people that have when the profit has not been generated in Hong Kong, which means no operation, nothing in Hong Kong, no profit, no contract signed. Even if you want to sign a contract with somebody, you don't do it in Hong Kong. So everything is done outside Hong Kong. Then we can apply for what we call the offshore tax exemption, which doesn't mean that you pay 0% tax. It means your profit has been exempted of tax, which means that potentially it can be taxed somewhere else, the place where you actually did this profit. So maybe later you may have, I don't know, US or Europe that just tell you, hey, you didn't pay tax in Hong Kong. Why? Oh, my profit was not made in Hong Kong. Okay, where was your profit made then? Well, in US. Okay, cool, come here, pay how much, 30% tax in US, something like that. And then, so there is a risk to it. It's a really gray area. So there is this risk because it's really, really gray area, and in Hong Kong it becomes more and more difficult to get it. Now, we apply still for clients that really insist to do it, and it's worth to do it only if you make good money. I mean, a sizable amount of money, because there is the cost of hiring the consultant, there is the cost of doing the whole thing. So yeah, to give you an idea, is around 100K to do it.
Procedure that you would
Sorry?
say half of the profit was generated here, half of the profit was not.
In theory, there is also something like that to do, but most of clients will actually either try to get everything or nothing.
And then, either then work with those.
Yeah. Now, for most entrepreneurs, this is really good enough, you know. When they start earning too much, what we are starting to do now with some of our clients that becomes a bit too wealthy is that we create an investment company in which we get the money from this company, and this investment company invests in real estate, in gold, in whatever, you know. Because at a certain point when you become really wealthy, you don't want to get your cash out. You have enough money, you know what I mean? You can, because the cash is just meant to spend, basically. When you have cash, you spend it. If you just keep it, it devaluates itself, you know, it loses value. So people that become wealthy, what they do, they take this money and they just invest it, you know, in different products and yeah. So they try to make it grow. That's the whole game. So basically, at a certain point, when you become too wealthy, what you do is just open another company, throw everything at it, and then make investment through that company. So yeah, that's what some of our clients are doing at the moment. Okay. Yes? No? Nothing? Yeah.
Just a quick question. If you got too wealthy and so on, and can you divert everything to Claimant's Islands or whatever, you know?
To claim as well?
To tax haven places like Claimant's Islands or...
Yeah, how you get it back after, how you spend it. Or how you invest it, or I mean, yes, it's possible. That's always the problem with the tax haven, is like how you do after to get it out, you know. But yeah, it's possible. Now the thing as well, what you have to know is that it becomes increasingly difficult in Hong Kong, for example, to open a bank account for BVI. I heard some clients have been called back by Hang Seng Bank to say, please close your BVI account because we don't handle it anymore. Okay. So yeah. So the tax haven, I'm really so at the moment. Tax haven like BVI, for example, is a good vehicle to own your shares of the company, for example.
Because Alibaba Hux,
Yeah, they all do it. So that's the common structure. What they normally do, actually, you will have a Hong Kong company with a BVI and another Hong Kong company on top. And then that's a way for you to transfer your share without having to pay stamp duty. Okay? So that's something, I mean, I work with IPOs, and all the companies that goes through us, that's the structure they have. Somewhere they have this structure of BVI. But that's for another reason, actually. Yeah. So it's to avoid the stamp duty. But for most of entrepreneurs, you know, I mean, let's get rich first, you know. If you're already rich, come to see me, we'll discuss about it. But yeah, that's another level, I would say. Yes? What else?